everybody, this is Brian Kasal, and I'm here with our review of 2017 and outlook for 2018. 2017 was one of the best market years on record, with the S&P 500 up over 19%, 21.5% with dividends. The Dow Jones was up over 25% with a 28.7% reinvested number. So clearly those are great numbers. The Dow Jones is full of more growth-oriented stocks these days, so it outperformed the S&P. But the more dividend-oriented stocks, which the Dow Jones used to be, were lagging this year, the S&P 500, but it was still a robust year across the board. Biggest winner was emerging market stocks, up 46% by the emerging market index. And small cap stocks also lagged a little bit, with the Russell 2000 up only about 15%. But still, 15% is a great year, 20% is a great year, 40% is an even better year. So across the board, everybody is really thrilled. Now, the economy showed some acceleration, and there's an optimism that's come back because of some of the recent policies, the tax cut that was passed, and the corporations are offering some bonuses, and they're also offering more benefits to their employees. And we're also seeing some companies come back to the United States now, as Fiat Chrysler announced that they're bringing some people back up to Michigan from Mexico, where all the plants are going. So it's seems very positive for the economy, very positive for the market. This year, for 2018, we see no reason for this growth to change. There's a lot of optimism. I say that with the caveat that we have not had a 3% pullback in the market in the entire year of 2017. It's an extraordinary feat, very unusual. It's only happened one other time in the 1950s, where we had a year without a 3% pullback. And so if we do have a pullback in the market in the near term, it could be a pretty sharp one, as a lot of people, we tend to react to things that have just happened in the last few years. They call it a recency bias. So because people are not ready for a correction, it could be maybe even a sharp one. But the fundamentals are still there for the economy to continue to grow. So if we had a sharp correction, we think it would probably resume an upward trend. And we don't see any fundamental clouds on the horizon. We're expecting to see the interest rates rise at least 3 to 4 times by the Federal Reserve this year. They did 3 times last year. And that's just simply a sign of a stronger economy, demand for money, inflation starting to kick in a little bit. Unemployment numbers are very, very low. So we're seeing some really extraordinary growth here that we haven't seen. We had a very slow growth economy for about 10 years, and now it's starting to kick in the near term. So we're optimistic about 2018. We're cautious about the fact that the markets have had such a strong move, so they can correct at any time. We had a 1,000-point move in the Dow in the shortest period of time, as the Dow Jones just went over 26,000. And as I speak, this is the 17th of January, and we're up already 5% for the year in the S&P 500. So things look very good. We'll watch it very closely. We'll be back again in the next quarter just to give you an update on where we stand on everything. The U.S. stocks are still ranked number 1. International stocks are gaining. Cash and currencies are obviously lagging, as the riskier assets are getting better returns right now. We're seeing commodities starting to run a little bit, with steel and some of the other industrial-based economies commodities starting to work. So we may see some changes there as well. But we'll be back with some more ideas here in the near term. And congratulations to a great year for everyone. We need to have good years because we also have some bad years. So we are very pleased with how things went, and we look forward to a good year in 2018. So also, don't forget to follow us on Facebook and on LinkedIn. We have a much broader, deeper discussion on our podcasts. And those podcasts will be emailed out to everyone, will also be on our website. So if you want a deeper dive on some of the details and some of the granular structures going on in the economy and the short-term trends that we see, that'll all be available on our podcast series. So feel free to go www.FourStarWealth.com/podcast, and you'll be able to see all those podcasts and deeper information. So thanks again.